I want to make a short video looking at trader sentiment in relation to market price, as it's a valuable contrarian indicator when trader sentiment reaches an extreme level in either direction. So I compiled a number of stats here, which are professional figures coming out of the US that show how traders are positioned in the markets, and it's a bullish percentage. And I use it as a contrarian indicator in that when price reaches a very high level, say above 80 on the bullish front, or when it reaches a very low level below about 20, as in only 20% bulls in the market, I look at it as one indicator as a possible turn that may arrive. And if that kind of sinks in with pattern and price, then it's more evidence for a turn in the markets. So looking at the figures I put together here, Euro bullish sentiment right now is standing at 93%, which is extremely high. So this is the kind of situation where I would look for tops in the Euro. Now it can stay high for longer periods, such as if it's above 80, it can above 75, 80, 85, it can linger. But if it gets up very high like this, it is speaking volumes that a turn may be near. Maybe. But it is important to take note of it. Now, looking at euro dollar, as I went over yesterday in the weekend video, we are approaching a horizontal resistance zone where traditional traders should look at the market and see it as an opportunity to sell into, in addition with the weekly shooting star here, which worked before and has a good chance of working again. So any move up into the sell zone of 114, 115, even 116, I will be looking at it at this market to turn over. So Australian bulls have a very high figure too, 83%, and that is also tying in with a look at Australian US dollar at horizontal resistance here, along with a local price pattern of a wedge, which I'm taking bullishly overall, but for a correction to follow, and to see the sentiment figure reset. So Swiss franc I don't look at at all, not after that crazy market intervention by the Swiss a number of years ago, where they basically lied to the market and then came in the next day and pounced, wiping out a lot of traders. So that is high, however, at 90%. Pounds at 76, which is quite high, and the numbers taper off a little there. Nothing to note about the Canadian at this stage or the Japanese yen. Now the DX number is very, very low, and that does tie in with the idea that either wave 5 of a bearish sequence is ending or the extreme of wave 3. I went over this yesterday, I don't know which, but I see the level as soon coming in for a corrective reversal. I have to say about the DX that this number has been bearish for a number of months. It's been under 30 or 35% or so, and that has been running on. It is reaching more of an extreme now at just 18%, so I am looking at it to turn in relation to the other dollar-based pairs I covered yesterday. So it's worth keeping that in mind for turns. It's just an indicator, but it is a valuable contrarian stand on trader sentiment. Gold again is low. I went over that with the yen yesterday, and oil is suitably low. I will take a further look at oil here because I want to point out the connection to the Canadian dollar, or at least to this particular Canadian pair, US dollar, Canadian dollar, in that like I covered the overlay chart with gold and the US dollar Japanese yen yesterday, I can do a similar one with US Canadian dollar and crude oil. Now I got a futures contract for crude, so I don't have to use that shitty US oil one anymore. Similar enough, but might as well take it seriously here. As you can see, there's a contrarian correlation, maybe a negative correlation if that's the correct term for it, here in when the US dollar strengthens against the Canadian dollar, oil tends to decline, and the opposite happens here. And when we have a strengthening Canadian dollar, as we are seeing right now, we have a stronger price in crude oil. again here. Now this has already started. The up move may be beginning in crude oil. Just a moment. But it hasn't been it's been lagging so far. Sometimes it does that, but I am essentially looking for a replication here of a down move in US Canadian, a down move here towards 125, 124, 123, and an up move in crude, and this to follow. Sometimes this will lag. For example, if we put it on the monthly, the correlation stands. US Canadian down, oil up. As you can see, now there was a lag here. This was going up and it was lagging in price, but ultimately the decline did follow here very sharply in oil while this inclined. So in any case, I'm looking for US Canadian to continue to fall as it did here, and we should see oil rise as it did in those situations again. So I like the look of that right now. But in any case, I'm bearish on US Canadian for certain. So it's not an extreme number in oil, but I've seen a lot of traders who are bearish on it. And given my view on the Canadian dollar, I'm not going to look to sell that as well with price action. Wheat is up to 56%. As I wrote, it was 11% a few months ago. So we've seen a dramatic turn there and a dramatic turn in price. And I'm looking for wheat to continue along with the fertilizer companies. Soybeans look like they may have put in a large three-wave low. I covered that in yesterday's video too, and the sentiment is quite low in that stage. So if we can see a price turn with a 5-wave advance and a small correction, there may be a chance to buy the futures there. Cocoa and sugar I haven't covered. Cocoa looks like it's actually like the price pattern is actually open to a move up here. That's looking quite good. Sugar, I think it needs a little more work on the chart, but it may be close if my 5-wave count is correct. It's just that the decline has been much steeper than the more sideways to down and more corrective evidenced, more self-evident corrective price pattern in soybeans. Sugar's been a steeper decline. I kind of mucked that up, but that sentence, but there you go. T-bonds are at 57, not much to say about that. The price pattern from the 3-wave advance is bearish in ZB. I can't rule out the idea in no way can I rule out, I mean, obviously, I'm marking this as a 5-wave decline and a 3-wave advance. I cannot rule out the possibility that this does turn over here and we see another 3-wave correction up. But I will say that it's looking bearish overall. Judging by the decline from here, I feel that this will be, even if it doesn't continue up, it will be more of a corrective move. But so far from the high, it's looking quite bearish. The idea of a second leg to this is only a guess right now. For now, the trend is down from this week. I'll cover that in a minute. Okay, and the S&P standing at 58%. Now, relating to the S&P, there is a very good article on Tom McClellan's financial site about German bonds, 10-year notes, and US stock markets, and the 30-year correlation between the bond spreads and US stocks. It's worth reading. It's not very long. It shows the change, which is quite interesting for historical reasons about the development. The German development, the historical German development of the country, not the people. So in any case, I recommend that as a read, as it could indicate based on past price action and past action in general, that a number of months hence, there may be a top coming in the US markets if this spread continues to tighten. So I'll leave it there. Worth noting, but the main ones here are the extremes in Euro, Australian dollar, and getting extreme on the US dollar. And the rest, though not extreme, it's worth, with price action, taking a note of it. So good luck to everyone and take care. I will update next week or at any other time I find something worthwhile to contribute with. Bye-bye.